Good morning and welcome back to Almus Market Mornings. It's not an uncommon day as the weekend comes closer once again. All the AI bulls are quite happy. Meta launched its flagship Muse Spark AI. It's a coding model which is at par with agentic coding models of Anthropic and OpenAI, offered at a lower cost. For some, expectation is that a price war is about to start. US, on the other hand, says technical talks with Iran are set to continue despite recent strikes. Markets are not somewhat pricing a managed situation rather than an all-out war. But of course, we will know how fragile things can be. Good morning, JK. Your key takeaways for this week and what are you expecting going into the weekend?
Good morning, Swaraj. Yes, ultimately, we have had a lot of things to digest this week and a lot to look forward next week as well. And as you mentioned about the AI pricing, so I think I also agree that there could be a AI price for making advanced AI tools cheaper and more widely available. Um, so this can also imply that the competition is intensifying and prices are likely to fall. AI adoption obviously will accelerate and there will be pressure on margins. So we will be interested to see how all this impacts the AI shares, where there is already concern about earnings disappointment related to huge investment. So something we'll be tracking as an overall impact on the markets. Now, the geopolitics, if on Wednesday we had seen escalating tensions, the same is quite a bit on Thursday. And the market latched on to Trump's reported statement that Iran had called and they said wanted to make and said that they wanted to make a deal. And this was not totally unexpected. We do still, of course, have skeptics who believe getting into a sustainable peace is, very difficult. Um, I also partially agree with that, but at the same time, we repeat that both US and Iran, particularly the official side of Iran, do not want to restart a full-scale war. And what has changed in the last few days is the uncertainty can continue for longer, and countries dependent on Middle East oil now will have to fall back on other long-term plans, particularly diversifying of sources of import, as well as developing renewables infrastructure. Though all this will take some time to have significant decline on dependence on imported oil. No, interesting uh, thing that I'm observing is dollar is rather directionless mode. Did not react with things, when they got tense and did not fall. Also, after the relative calm has returned. In fact, I myself thought that it will have a much larger traction in the upside after it broke 100.50, where there was a resistance for more than 1 year. But that did not happen, and we are seeing some sort of a softness seeping again. And if we break back below 100.50, it will be quite bearish for the dollar because now we are already at 100.6 now. I was expecting it to touch at least 103, uh, if not higher, based on the technical projections. But it seems like, some sort of weakness is um, affecting the dollar. Now, having gone through all this volatility related to geopolitics, now people are interested to know how the upcoming inflation data next week would be, and that will be the dominating factor for monetary policy, particularly for the Fed, as price pressures are not just from oil but from various other factors, including AI spending. Reflecting the same, core inflation is expected to come in at 2.9%, proving the point that oil is not the only factor. In fact, inflation well above 2% target for 5 years now, including the core. PPI is at 4.9%, indicates that the pipeline pressure on retail inflation is also quite high. So if we do get inflation in line with the forecast that is at 2.9% core, we feel Fed will be on course to hike rate in September, if not July. Such a situation will be bullish for the dollar, although this may also weaken the political position for Trump, as it was hoped that inflation will fall with oil price coming off after the war. And if it doesn't, the upcoming midterm election in US could be, very dicey for Trump's party. Now, another headwind for inflation is the weather rolling El Nino that emerged across Pacific last month and has continued to build. It's likely to be one of the strongest in more than 75 years. So, US Climate Production Center is closely watching the development on the same. Adding to the inflation factor is the increased defense spending, which means fiscal worsens, leading to higher rates. So a lot of focus on how the inflation comes next week for us. One more important thing that would be watched by me is Kevin Walsh, who has been so far tight-lipped about the Fed's thinking on future monetary policy, completely removed the forward guidance aspect of the meeting of Fed. He is to have the bi-monthly deposition before the Congress, and I'm sure there will be probing questions by the members. He cannot avoid answering pointed questions, so we'll be looking ahead to what he has to say about particularly the Fed's plan, etc. So I think market will be focused on that as well. That apart, the upcoming earnings season could be a defining moment for AI sector, and the investors are no longer buying the AI story on hope alone. They want proof that massive spending on chips and data centers is translating into higher revenues and profits. Yes, strong results can extend the AI rally, but a disappointment is likely to have a much bigger impact on the markets. On the rupee side, it was definitely a much calmer day for the Indian market, and market recovered in all segments. Importantly for rupee, 95.50 is once again well protected, both from PSU that initially sold, and later on even large corporate selling was also heard. So definitely we are now in a more of a two-way interest from corporate. Everyone knows that if rupee weakens further, there could be more policy measures. That's one, thing that is stopping the speculative buying. And already mentioned that India market is now on the selling side, at least for a couple of days after the points showed that the offshore rate is lower than the onshore rate. So even with all the volatility seen in the last 2 days, oil is also trading much lower now than had been assumed and could still stay there if there is no renewed major tensions. So rupee, I think, if anything, there can be some scope for a dollar rupee to go down. 95.50 has proved to be a very strong resistance also. And even hearing in the market that export hedging has now actually uh, gone up. Now, India also will get its inflation data on Monday. Expectation is at 4.3% versus 3.9% in May. So that will be another focus. And the earnings season that starts in full force next week, both on the global as well as in the Indian side, will be another factor that will be. So we have a lot to look forward to in the next week, and we can definitely justifiably be spared of the global tensions for some time now. Thank you, Swaraj.
Thank you, sir. And yes, lot to look forward to next week, whether it's the inflation from US or from India, and then we have got the earnings season. Uh, there are three, four narratives which are ongoing, of course, apart from the geopolitics. There's the AI and how that spending is sort of translating into earnings. That's something markets are watching because the valuations are exorbitantly high. On the other hand, there is a structural inflation problem. A lot of economies are now focusing. New Zealand, South Korea, even US, Europe, UK, everyone is struggling with that. Adding to that, there is a climatic problem which is keeping the agricultural prices higher. So all of these factors are ongoing, and and this is all apart from whatever President Trump tweets and that kind of reactions that we get. So a lot to look forward to next week. We'll focus on that. That's it for this week. We will catch up next week. Have a great weekend. Thanks for listening.